Welcome back. 1:47. We are 13 minutes away from the minutes release, and then we just had to wait until Powell take the podium and key in on his Q&A session. But so far, they do a whole lot of trading today. Pretty much the same as the last couple of days. If anything, trying to be disciplined that the big move in the market today is going to be at 2 o'clock and after. Everything else, even since last week, I talked about it since last week, that what we have last week and so far until this moment is window dressing, dress rehearsal for the big event. So it is what it is. So far, TOT is down a little bit. It went as low as, I think, 100 point. Let me see what the low of the day is. Low of the day, 100.08. Woo! All right, so let me see here. All right. I'm logging into YouTube just in case somebody will pop in the chat room to communicate. Normally when I do this chat live stream in the morning, there's nobody there. And even if there is, rarely does anyone care to talk or ask questions. All right, let me see. Okay. All right, it's up and running. Turn down the volume. I'm sure the market will parse every single word that they wrote, and then every single word that Powell will say. Par for the course, people always do. Yeah, so I'm just gonna leave. I have not checked the market since lunch. I took off, make myself lunch around 12. That I have not sit down at my desk until this very moment. So let's see, TOT is down. Let's see the rest of the market. Look like USO is down. SPY, what's going on with the SPY? Up a little bit. Pretty much even Steven. How about QQQ? Pretty much even Steven. How about IWM? Down a little bit, but you can say that's even Steven. Yeah, I mean, is it a surprise how the market behaved until now? No, okay, it shouldn't be. Rational people is not gonna make a whole lot of big move until later today, until maybe the next 10 minutes, when the majority, when it comes down to this market, okay, and I'm gonna take the next 5-10 minutes to talk about the overall market. The market is always about two sides, okay, buyer and sellers. There's always two sides. I always cringe when I hear people talk about a directional movement of a stock as if like that's the only. Often, if you watch YouTube, you hear some people complaining, "Oh, this stock is down so much. I can't believe the selling." Well, or on the opposite side, the same thing. When a stock is running crazy hard, it's always two people. There's always two sides to a trade. So for whatever reason, people sell and buy. There's always somebody else on the other side. The only question between the buy and seller is the sentiment. When you have weak sentiment of a stock, then no doubt it's going to go down. But it still requires two people, okay, or two parties. Could be two bots for all I know, right? I can't be say two people, but if the sentiment is negative, where the buyer is unwilling to pay up, but only willing to buy something at a discount or lower prices, then guess what? It's gonna go lower. It still requires two people on opposite side of the trade. So sentiment drive the direction. Okay, that's all. It's cringy. Trust me, it's cringy for me to hear people complain about something up or down. I'm like, well, it's come down to sentiment, the emotion of when the sentiment is strong, you're gonna have upward movement. It is that simple. At least in a long term for sure. Short term manipulation, all kind of crazy thing can happen, but ultimately it still comes down to sentiment, no matter what the manipulation try to do. Okay, no matter what. If someone is trying to manipulate a stock down, it might work short term, but if the sentiment is strong, buy will come in, will step in and push it higher again. Okay, that's just the way it is. So it's hard to quantify sentiment, but you can take a look at a chart of any stock, and you can tell very quickly what the sentiment is. When it's sideways, that's a different story. Okay, when it's sideways, it's a different story. So IWM, up. Let's see. Start the year. Let's see. The year start right. Let's mark the start of the year right there. That's the end of the year. I'm gonna draw a vertical line, so going forward, I don't have to look. Is it a perpendicular line? There you go. There you go. That's the start of the year. So give or take, it's 6%. Yeah, 6 to 7%. Nothing great. DIA, let's see. DIA is pushing it. Pushing it is getting close. Okay, so if it get anywhere near 421, I might have to throw out a bear spread going out to the end of October. I got 6 weeks to expiration. So yeah, that's definitely in play. That and SPY. Okay, I talked about this before, where I think SPY and DIA are the two indices that I'm more likely to make some kind of bear play compared to QQQ or IWM, because QQQ and IWM, can it go down? Absolutely, but it's kind of hard to figure where would be the right spot. Okay, it's 155. Let's see what else. Let's see what moved big today so far. Now I got time to look at my list. BNTX is a leading loser on my watch list, down 5%, but then it went up big yesterday. BNTX. Yeah, it went big. Look at this. Look at this thing. Big. Oof. Let's see. Let's go back 3 years. Yeah, it's at the zone. Okay, look at this thing. Look at this thing. Let's draw it in. It's a pretty big zone, but that's the zone. Look, see, wick, resistant, barely touched it, right? And now it's in. So it's in the zone, people. It's in the zone. 3 years, okay? 3 years, that zone. So it's no joke. Not random that it is in that and then reject. And then it might go sideways for a while. So we watch it. It's on the watch list. Let's see what else is worth talking about on the big list here. Of course, the competing company used to be Moderna. Yikes. Yikes. Okay, it's this. Can this be a tax loss selling play? Maybe. Can't get any uglier than this. Okay, so look at last October. Goodness gracious. Yeah, that was ugly. Okay, sure, it went beyond. It went beyond, but then again, because earning came out on November 2nd, but still, buying on the tax loss selling bottom was not a bad idea. Not bad at all. You're talking low 70s, mid 70s. Yeah. Anytime when you get 20% plus return by Christmas, come on, right? Let's see. If it was low 70s, and then by Christmas, what is it? Christmas here, give or take, it is 88. Yeah, come on. Who's gonna complain? Buying 72 and sell at 88 or 90. Who's gonna complain? Okay, so it's 158. I need to open up my CNBC thing here. Perhaps I should turn on CNBC, listen to the jib jab, jib jab. Put it on low volume so you don't have to hear it, but I can hear it. We are less than 1 minute away. Come on. My prediction, 25 basis point. I don't see the economic news so bad the last week to warrant a 50 basis. I mean, I think it's warrant a 50 basis, but the econ data doesn't say it, even though I don't believe in it. Okay, it's 2 o'clock, so let's see. Let's see what's going on here. Let's see. Let's see. Let's see. Go to the 1 minute. It shouldn't. To me, if it was a 50 bips cut, it would have created a violent bad market. As far as a 25 bips cut, which I think that's what we're gonna get, or uh, crashing for sure. Now, whether Fed slash rate by half point. Oh boy, interesting. Look at that. Huh? I thought a month ago that's what they should do. This is going to be very interesting, people. Very interesting. Okay, so SPY. Be careful. I stand by my commentary that a 50 bips cut is going to signal something scary. That the market, that the Fed is scared. Okay, so that's not, I'm not standing down from that. We all have seen how the market reacted at the first knee-jerk reaction when the news come out, and then reverse. Watch out for that reversal. That's all I'm saying. Okay. Am I surprised? Yes. But if I go back to last week, before the econ data was not so bad, this past week and a half, then I thought I was right. Because for all the people that follow me in a chat group up until this week and late last week, you heard my opinion. I said 50 bips. I predicted. Let's review. There's a video. That I made where I predicted 50-50. The first two cut is going to be 50-50. I made that. I even post that in the chat group. So that was my prediction. Look like a couple of my order trigger on the pop. No complaint here. I take my VMC out of here. Done. Kaputs. See ya. Thank you. Goodbye. Yes, I sold VMC. Look like my Goldman Sachs order of 490 also trigger. I take it. Not gonna complain. Let's see. AAP, BBIO, Amazon. I'm just looking at my portfolio down the list. Chesapeake. That's a surprise today. Because maybe this is a catch-up trade to natural gas. Let's see. CYTK is up. ELF is up. Goldman Sachs 490. Would I sell more Goldman Sachs? Let's take a look at Joe Goldman Sachs. Okay, let's take a look. Went up as high as 492.99. Wow. I had a standing order at 490, so hey, if I was quick enough and not yapping like I am right here, I would easily sold more at 492 and above. But that's okay. It's all right. I don't have a big position. Would I put in an order now to sell at 493? Yeah, I would. In fact, I'm doing it right now as we speak. Why not? Especially when I bought it so much lower. Okay. 493. The order is in. I had a couple order in for Visa as well to full exit that on any kind of elation. I'm going down the list here, alphabetical order. Okay, TOT down a little bit. Yeah, that's all right. SWTX up. SRPT up. Slumberjay up. Schwab up a little bit. That's okay. Rocket down a little bit. That's okay. Palantir up. That's fine. Get to 40 and I will trim. Pfizer up a little bit. Nvidia up a little bit. Nike up a little bit. I have a tiny position in Nike. 20 shares. Nothing huge. Microsoft down. I still got some Morgan Stanley, which I will say bye-bye right here, right now. It's gone. I mean, I take $5 profit per share. I bought them at 95-ish. So yeah, goodbye. It's a small position. I had an order in at, I believe, that, well, the order was for 102. And I revised it down to whatever it is, 100, whatever it is, and get it out. CRISPR. All right. I'm trimming some more CRISPR. Well, I'm going to try. Come on. Okay, order is in. Kingsley is in the chat room. Yeah, 50 bips. Basically, it was a flip of a coin. As of late last night, I believe the odds maker was doing 50-50 on the 50 bips or 25 bips. That was undecided. It was an undecided. The way the market behaved, pay attention to how Powell answer the question. You know, I know, you know, the market know. What is the first question? Why 50? Why 50? Why not only 25? What is it that you see, Mr. Powell? What is it? I thought things was good. I thought everything is hunky-dory. Consumer strong, resilient. Retail sale is up. That's what was the message yesterday. So what is it? What is beneath the hood? What is the underbelly that tell you that you need to cut 50? So pay attention to that. Yeah, it's basically I just went through my portfolio. Nothing huge, nothing jump out that I need to do any more trimming outside of Morgan Stanley, and a little crisper, And you know what else I'm blowing out? UPS. Yes, I have UPS. It's in the profit, and I'm saying bye bye. However small the profit is, I'm saying goodbye. Let's see. That's weird. It won't let me put the order through. Why not? Why not? I try to put in the order to sell my UPS position, and it say can't do it because it didn't tell me why. So I gotta go check. What is it? Come on. What's going on with the market? Since I'm SPY, what's going on with SPY? Look like it's gave up a little bit of the early pop. There you go. There's a pop and fizzle. Yeah, that I'm gonna leave it on that. I'm gonna leave it on the SPY. Why couldn't I sell my UPS? What was going on there? I'm mad. Why would you not let me sell? What's going on? Okay, the sound you heard is the sales order when going through. Out, UPS. Not a big position. I got 30 share, but good riddance. Out of here. UPS, yeah. Goodbye. Done. Done. Let's go back to the 1-year chart here on UPS. Yeah. Don't mind buying down here, 125. And yeah, I take the 131. It would have been a little bit more if I was able to exit 3 minutes earlier before the system have a little problem. It's okay. It's 30 share. Missing out on an extra 15 bucks is not going to kill me. So we'll see. We'll see what Mr. Powell is going to say. And my initial reaction to the market is I am surprised that the market reaction is not as negative as I expected. My expectation prior to this week was if it's 50 bips, it's going to be a very nasty reaction. We still can get that, okay? I'm not saying it's over yet. When Powell comes on the stadium, on the podium, and say, when he starts to fumble, stumble, mumble, that the labor market is not as strong. Yeah. So depending on what Mr. Powell say, then the market can really react after that. But as of right now, as you can see, everything is saying, oh no, oh no, oh no. DIA is still up, I'm guessing. Yeah, DIA. Oh, barely. Even Steven. Yeah, it's, yeah. Look at that. Pop, fizzle. How many times can I say the initial reaction is always not the right reaction that you should chase, okay? I'm not saying it's always the opposite. What I always tell people is whatever the initial reaction is, give it time to digest, okay? If you jump in, if you are a market shorter, okay? If you short the market and you saw this in the first 1 minute, chill. Or if you want to buy the market, chill. Okay, it's just, but this happened. Why does something like this happen? Because people cannot control themselves. The market is all about fear, greed, and stupidity. More than fear and greed, it's about stupidity. You can tell someone all day long, don't do anything in the first 15 minutes. Don't, just wait. Oh, I gotta buy. Just chill. Wait until Powell say. We all know when Powell start to answer question, things can go really bad. Okay, so calm down. TLT, look. Yeah, TLT is okay. It's. I sold naked put on TLT this morning on the weakness. Yeah, I have TLT puts at 98.99, and I added 97.5. Yeah, I'm okay with that decision. It's okay. I'm not fearful, and if they got assigned Friday, I'm okay. It's all right. Let's see what the banks are doing. Goldman Sachs, pop, fizzle. I don't bother to take a look at everything. You know why? Because they're all going to be the same, pop and fizzle. So go back to SPY. Okay, go back to SPY. We'll see. We'll see what's going on in the next 14 minutes. When Powell start the Q&A, that's when it matters. Okay? That's when it matters. I'm going on to, if you want to listen, you can listen to it. I'm going to listen to it live right here. It's going to be on YouTube as well. You know, they always stream live Mr. Powell. Is it me or the stream is really laggy? I think the stream is like really laggy. I can't tell. It appeared to be very laggy. Annoying. Oh man, I might have to end my stream because it seemed to be really, really bad. All the day, I switched my internet last week and it was working just fine. Everything was running so nicely. And then just today, what's going on? Everything is so laggy, so slow. Everything. Jesus. Awful. Here we go. I found the FOMC. Here we go. It seems to be really bad. All the day, I switched my internet. The music you hear is the music from the FOMC. If I was smart enough to switch my screen, I would do it. Now, let me see if I can figure it out. So we can watch Mr. Power live together. Live! Come to you live! Let's see. Let me see. Alright, how do I... Dark source. I'm definitely not up to speed on how to do this. I used to know how to do it, but I don't do it often enough, and because I don't do it enough, then I'm just like, I don't remember. Source. Where is that? Where are you? Source. I just close out the FOMC by mistake. Let's see. Let's go back to FOMC. There we go. I'm not very smart. I'm not very smart. That's for sure. figured it out. But now, I might not be able to figure out how to go back. Now, why is it not shown on YouTube? That's the question. There's a lag. Ah, it is on YouTube. Just hang in there, people. Hang in there. 7 minutes away until Mr. Powell take the podium. And as usual, the first few minutes, he's just gonna read from the statements that they issue, so nothing new. Okay, what the key is the first Q&A questions. Why 50 bips? Why? What are you doing? What are you seeing? Did you consult with Tom Lee? While we wait for Mr. Powell, I will go and read the statement themselves because I have not read that yet. Okay, let's go and read. I'm just going to CNBC. If you go on CNBC, I'm gonna paste that in the chat. Okay, you can read the entire statements with all the changes that they've made since the last meeting. So if you want to read it, you can yourself. Powell will, if you don't want to read what I just linked in the chat room, Powell will read verbatim, word for word, what is on this. So you can wait, and he will read exactly what is written there in 3 minutes. while the market is not on the screen, I can tell you that the market is still up slightly. Nothing, which makes sense. Okay, you gotta understand the market is behaving rational, if there is such a thing. Okay, the initial knee-jerk reaction on both directions, on the top range and low range, was just stupidity. Now it's coming to balance and it is more sane until power speak. Okay, no need to do anything. Personally, I look forward to hear what Powell had to say or how he answered the question. Why? Why did you do what you do? Why the 50 bips? I want to hear, every single person that is going to ask him that question is going to ask something about that. Unemployment rate, jobs, because that's the focus of the Fed. Okay, that's the focus. So you're going to see all kind of questions about what are you seeing in the job market that scare you? What do you see in the unemployment rate that scare you? What do you see? Maybe not to the exact word what I just said, but here you go. Okay, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand in the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Here we go. Here we go.
Steve
First
Leach from
question.
CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed that made the committee go 50, and how do you respond to the concerns that perhaps shows the Fed is more concerned about the labor market? And I guess should we expect more 50s in the months ahead? And based
Is anyone
on what
surprised
should we
at that
make
first
call?
question?
Thank you.
Go jump off a bridge.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the 2 employment reports, July and August. We've also had 2 inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
Sorry, thank you, sir. How do we figure out in the months
Really?
ahead, is there another
The employment
25
number
or
is
50 coming in?
fake.
Based
It's
on
fake?
what shall we make that call? Thank you.
Sure. So
It's going to be revised
couple
down?
things.
Oh, shocking. Shocking.
a good place to start is the SEP. But let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where of what the committee is thinking today. But the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Go ahead, Chris.
Hi, Chris Rugaber at Associated Press. Thank you.
Okay, I switched away from the
projections show
screen
that
back to the
Fed,
market.
Fed officials expect
but
the Fed funds
we
rate
will
to
still
be
have it on the
above,
background
their
to
estimate
listen.
of long-run
Okay.
neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single
Market is
person on the
still
committee, if you ask them what's your
not
level
that
of certainty
reactive.
around that, and they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one?
Bitcoin's doing okay.
If you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is
Goal
up
did
to
hit
4.2%, and
all-time
inflation's
high
down
at
to
240.
a few tenths above 2. So we know that it is time to recalibrate our policy to something that
Goal
is
is at the
more
next
appropriate
fib,
given the progress
hanging
on
around.
inflation and on
After that,
employment, moving to a more
247.
sustainable level. So
I
the
trim a
balance of
little
risks
bit,
are now even. And this is
but
the beginning
that's
of
it.
that
I'm holding.
process. I mentioned the direction of which is toward a sense of neutral.
GDX, if
and
you
we'll
bought,
move as fast or as slow as we think is
Nice
appropriate
move,
in real time.
nice
But what you
pop.
have is our individual
Next up,
accumulation of individual
potential,
estimates of,
well,
of what that will be in the
41.
base case.
almost got there. I had a whole bunch of naked
Howard
puts
Schneider with
that will
Reuters.
go worthless.
How close was this in terms of a decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. But, you know, if you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open. And I think we left it open going into blackout. And so there was a lot of discussion
Eli Lilly,
back and forth, good diversity of opinion, excellent discussion today. I think there was also broad support for the decision that the committee voted
come down
on.
to
So
$8.95.
I would
and I
add,
will
though,
buy.
look at the SEP. All 19 of the participants wrote down multiple cuts this year. All 19. That's a big change from June, right? Seven of them wrote
UPS.
down 3 or more, and
Yeah.
17 of the 19
It's
wrote down
about
3 or
where I
more
got
cuts, and
out.
10 of the
That's fine.
19 wrote down 4 or more cuts. So, you know, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in
ELF.
the books, can you give us some guidance as sort of follow up to Steve on the pacing
Perhaps.
here? Would you expect
Well,
this to be running every
until
other
thi-
meeting?
if this was the
once
last
we
week of
get into
October,
next year?
I'd be more confident.
For
Yeah, we're
example?
For
gonna
now,
take it meeting
we
by
still
meeting.
got
As I
another 6
mentioned,
weeks away from
there's no
ELF
sense
to
that the committee
bottom
feels
out.
it's in a rush to do this. We made a
could
good
stay
strong
right here.
start to this,
It could
and
go
that's
sideways.
really, frankly,
That being
a
said,
sign
I
of our
did
confidence. Confidence in
do,
inflation is
call
is coming
spread that
down
I mentioned
toward
last
2%
week.
on a sustainable
So-
basis. That gives us the ability. We can, you know, make a good strong start, but and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and
Tesla up.
make our decisions as we go.
Let's cycle through the next 7. Netflix down.
Hi, Chair Powell. Gina Smilik, The New York Times.
Little
Thanks
bit.
for taking our
No big
questions.
deal.
You and your colleagues
Apple
in your
up.
economic projections today see
No big
the
deal.
unemployment rate climbing to
sold 3
4.4%
puts
and staying there.
Down here.
Obviously, historically, when the unemployment
That should
rate
be
climbs that much
in
over a
good
relatively
shape to
short
collect the
period of
money.
time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through
Google.
why you see the labor market
All right.
stabilizing, sort of what's the mechanism there, and what do you see
Nothing
as
to
the
worry there.
risks?
So
Meta.
again, the labor market is actually
I
in
have an order to trim at
solid
544. Okay,
and
so
our intention
if we get back up
with
there
our
again,
policy move today is to keep it there.
I will trim.
You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace.
Amazon.
Inflation is coming down. The labor market is in
I'm
a strong
out.
pace. We want to keep it there. That's what we're doing.
Where would I return? 178 down to 172.
Sorry, Nick.
Channel low.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the
Bank of
policy
America.
rate such that an accelerated cadence could be expected
Trim
to
time.
continue?
Okay,
Schwab.
multiple questions there. But so I would say
I like,
we don't think we're behind.
but it can
we
go
do not think we're-
sideways
we
to
think
the
this
end
is
of
timely.
October. Tax
But I
loss.
think you can take this as a sign of our commitment not to get behind. So it's a strong move. So your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting? Or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, "Oh, this is the new pace." You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank you, Colby Smith with the Financial Times. I'm just following up on Gina's question on rising unemployment. Is it your view that this is just a function of a normalizing labor market amid improved supply? Or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. Meant by many other measures, the labor market.
Okay, people. Seem like after the first 15 minutes of questions, we're gonna get the same question. Okay, if for those that have followed the way Powell Q&A session go, usually after the first 15 minutes or so, you're gonna see the same question, same kind of answer over and over and over. So it's kind of pointless to listen. Regardless, a surprise in many ways. Surprise most people that, well, at least half the people, that it was 50 bips instead of 25 bips. So far, it surprised me that the market take the news in well. Hey, I'm not complaining. My portfolio is up, okay? Chill. Nothing to complain about, okay? How the market react for the rest of the afternoon, we will see. But for now, hey, I'm pleasantly surprised. If anything, the market has surprised me more in the last couple of weeks than I can recall. Starting with NVIDIA. When NVIDIA number came out and the way the market reacted was definitely a surprise. And there have been many surprises since. And today, so far, the reaction is definitely a surprise. I thought for sure if there was a 50 bips cut, the market would panic. Okay, because the market would smell recession fear from the Fed and sell off. That didn't happen. Does that mean that it won't happen next week, tomorrow? We'll find out, okay? But for now, nothing to complain about. So I'm going to shut off the stream so that I can focus on trading. If there's anything to trade, I can only do two things at the same time. I can't be watching Powell, listen to him, and watch the market, all that stuff. All right, people, enjoy your afternoon. Be careful, okay? This has been more tame than I expected, no doubt. It can still go crazy later, all right? So we'll see.